If you've ever wondered how the wealthy manage to stay rich and even grow their wealth over time, you're in the right place. We're going to explore 7 of the best compounding assets that the wealthy use to preserve their wealth, as preserving wealth is a fundamental concern for the wealthy. Compounding assets refer to investments that generate returns, which are then reinvested to generate further returns, thus compounding over time. These compounding assets are tried and proven wealth preservers that have stood the test of time. So, let's jump right in. 1. Dividend-paying whole life insurance. When we talk about wealth preservation, dividend-paying whole life insurance often flies under the radar, but it's a hidden gem in the world of financial growth and protection, especially for the wealthy. Unlike term life insurance, which only provides coverage for a specific period, whole life insurance offers coverage for your entire life. But what sets it apart is the cash value component. The cash value grows on a tax-deferred basis, allowing policyholders to accumulate wealth within the policy while enjoying the benefits of life insurance protection. As you pay your premiums, a portion goes into a cash value account that grows over time, thanks to compounding interest. This cash value can be accessed through policy loans or withdrawals, providing liquidity when you need it. Additionally, some whole life insurance policies pay dividends that compound over time, which policyholders can choose to receive as cash, used to purchase additional coverage, or reinvest to enhance the policy's growth potential, further enhancing the policy's value. Moreover, the death benefit of whole life insurance policies is typically income tax-free, providing a tax-efficient means of transferring wealth to beneficiaries. For the wealthy, who often have complex financial needs and estate planning considerations, they leverage dividend-paying whole life insurance as a cornerstone of their estate planning strategy, ensuring financial security for their loved ones while preserving liquidity and tax advantages. 2. Gold. Gold has stood the test of time as a store of value, and it's no surprise that the wealthy have long favored it as a wealth preservation asset and its compounding prices and worth over the years. In times of economic uncertainty or market volatility, gold tends to shine. Its scarcity, durability, and intrinsic or inherent value make it a reliable hedge against inflation and currency devaluation, and most importantly, a wealth preservation. Unlike paper currency, which can be printed at will by governments, gold cannot be replicated, meaning its price tends to rise during periods of market volatility, inflationary pressures, and geopolitical instability, providing investors with a safe haven for preserving purchasing power, thereby ensuring that it retains its value over the long term. So, wealthy individuals often allocate a portion of their investment portfolios to physical gold or gold-backed exchange-traded funds, ETFs, to hedge against systemic risks and currency devaluation, as gold serves as a safe haven asset, providing peace of mind and stability in turbulent times. 3. Real estate. The most known and celebrated asset of many wealthy individuals' investment portfolios. Real estate has long been synonymous with wealth, and for good reason. It is a tangible asset class that offers multiple avenues for wealth preservation and growth like residential properties and commercial properties, making it a favorite among the wealthy. First and foremost, rental properties generate passive income in the form of rental payments, providing a steady cash flow stream regardless of market conditions, which can be reinvested to acquire additional properties or diversify investment portfolios. Additionally, real estate values tend to appreciate over time, offering capital appreciation potential. Also, as rich, wealthy people love debt so much, most tend to leverage mortgages to finance most of their real estate acquisitions, which amplifies their returns, as investors' equity increases with property appreciation and mortgage paydown. Moreover, Real estate provides diversification benefits, as it often moves independently of the stock market. For the wealthy, real estate isn't just about owning property. It's about owning assets that provide steady income streams and long-term appreciation, all while hedging against inflation and market volatility. 4. Investments. When it comes to preserving wealth, the wealthy understand the power of investment vehicles. Stocks, index funds, bonds, and fixed income securities form the backbone of many rich and wealthy affluent individuals' portfolios, as they not only compound over time, they also preserve their wealth. These assets offer a blend of stability, growth potential, and income generation that is essential for long-term wealth preservation. The wealthy carefully select a mix of investments tailored to their financial goals, risk tolerance, and time horizon. Whether it's investing in stocks for steady dividends, index funds for broad market exposure, or bonds for fixed income, they strategically diversify their investments to weather market volatility and economic fluctuations. That's why you will always hear that a wealthy individual has shares of stocks of their own company, and even for other companies, not only for capital appreciation and dividend income, but also for preserving their wealth. Index funds provide diversified exposure to broad market indices, allowing investors to capture the overall performance of the stock market with low fees and minimal effort. And if you find rich and wealthy people with index funds, then they are just adding a little side piece to preserve their wealth. As for government bonds, municipal bonds, corporate bonds, and treasury securities provide various risk-return profiles and cash preservation to suit their preferences. Diversifying investment portfolios across stocks, index funds, bonds, and fixed income securities helps mitigate risks associated with individual asset classes and enhances long-term returns through compounding. 5. Private business. One of the most powerful ways the wealthy preserve and grow their wealth is by starting and investing in their own private business. Owning a business not only provides a source of income but also allows for significant wealth accumulation through business growth and expansion. The wealthy often take an active role in managing their businesses or investing in promising startups through venture capital firms. By leveraging their expertise and networks, they can identify lucrative opportunities and generate substantial returns over the long term. They understand the value of entrepreneurship and invest in businesses across a variety of industries, from technology and healthcare to manufacturing and retail. Additionally, owning a private business offers tax advantages and asset protection benefits, further enhancing wealth preservation strategies. For the wealthy, owning a private business isn't just about making money. It's about creating value, leaving a legacy, and securing financial freedom for themselves and future generations. If maybe they don't have their own company, and this is a big if, as most wealthy people are obsessed with having something they can call their own or is in their name, they may also decide to invest in private equity or a hedge fund. Private equity and hedge funds are the playgrounds of the wealthy, offering exclusive opportunities for wealth preservation and growth. Private equity investments involve acquiring equity stakes in other private companies, often with the goal of restructuring and selling them for a profit. Hedge funds, on the other hand, employ a variety of sophisticated strategies to generate returns while managing risk. From long or short equity to macroeconomic bets and arbitrage, hedge funds offer access to exclusive investment opportunities not available to the average investor. The wealthy allocate a portion of their portfolio to these alternative assets to diversify risk and maximize returns. While private equity and hedge funds can be complex and risky, they also offer the potential for outsized returns, making them attractive options for preserving and growing wealth over the long term. By building and acquiring successful businesses, they create streams of passive income and long-term wealth that can withstand economic downturns and market volatility. As we move on to the remaining wealth-preserving compounding asset, kindly like the video if you find it informative and constructive so far. Also, do leave a comment below on your view of this video and any other compounding assets that are great for preserving wealth. Let's continue. 6. Land. Just like real estate, land is another compounding asset favored by the wealthy. It is a timeless asset favored by the wealthy for its stability and long-term appreciation potential. Whether it's agricultural land, development land, or commercial real estate, owning land offers numerous benefits for wealth preservation and growth. Land is a finite resource, and as populations grow and urbanization continues, its value tends to increase over time, making it a solid long-term investment. The wealthy understand the value of land as a tangible asset that can withstand economic fluctuations and provide a hedge against inflation. Additionally, land can generate income through farming, leasing, or development, further enhancing its appeal as a compounding asset. For the wealthy, owning land isn't just about property rights. It's about securing a valuable asset that can be passed down through generations. By strategically acquiring and managing land holdings, the wealthy can diversify their portfolios, hedge against inflation, and preserve wealth for the future. 7. Collectibles and tangible assets. Beyond financial instruments, the wealthy also diversify their portfolios with tangible assets and collectibles. From rare artwork and vintage wine to classic cars and luxury watches, collectibles offer a unique opportunity for wealth preservation and appreciation. The wealthy see value beyond monetary returns in these assets as they are obsessed with these items and appreciate the history, craftsmanship, and cultural significance of collectibles. These assets often hold intrinsic value and have demonstrated resilience during economic downturns. Moreover, they provide diversification outside traditional financial markets and offer potential tax advantages, such as favorable capital gains treatment for certain collectibles. The wealthy carefully curate their collections, focusing on assets with proven track records of appreciation and demand, as these artworks, vintage wines, classic cars, and watches are sought year after year, and at the same time, their prices rise year after year. Additionally, investing in tangible assets can provide personal enjoyment and fulfillment, further enhancing their value beyond financial returns. While collectibles and tangible assets may require specialized knowledge and expertise to evaluate, they can serve as valuable components of a diversified investment portfolio. So if you have a luxury watch with you now, hold on to it, as you may not know its value in the next 5 to 10 years.